So, you've probably heard about crypto. Maybe you heard about Bitcoin hitting some crazy new high. Or maybe a friend keeps talking about a coin named after a dog. It can feel like a whole new universe with its own language. And honestly, it kinda is. You hear terms like stablecoins, meme coins, altcoins, and it's easy to get lost in the noise. It feels like every day there's a new coin popping up, promising to be the next big thing. But what do they all do? What's the difference between a coin designed to be stable and one that's literally based on an internet joke? That's what we're here to break down today. Think of this as your Crypto 101, a guide to navigating this wild and sometimes confusing digital landscape. We're going to go past the hype and the headlines to look at the tech and the purpose behind these different types of coins. We'll strip away the jargon and look at the fundamentals. What makes a stablecoin stable? Why would anyone invest in a meme coin? What even is an altcoin? It's easy to get caught up in the price charts, but understanding the underlying utility and the why behind each project is way more important. My goal here is to give you a clean, clear framework for understanding the crypto space. By the end of this video, you'll be able to tell the difference between a utility token and a security token, and you'll understand why some coins are built for privacy while others are built for governance. It's not about telling you what to invest in, but about giving you the knowledge to make your own informed decisions and cut through the noise. So let's get into it. Alright, first up, let's talk about stablecoins. The name pretty much gives it away, right? These are all about stability. In a market that's famous for its wild price swings, stablecoins are designed to be the calm in the storm. The whole idea is to create a cryptocurrency that doesn't fluctuate like crazy. So how do they do that? Most of the time, they're pegged or linked one-to-one to a real-world asset, most commonly a fiat currency like the US dollar. So for every one digital token, say a USDC or a Tether, there's supposed to be one US dollar held in a bank account somewhere as collateral. This makes them incredibly useful for a bunch of different things within the crypto ecosystem. For traders, it's a way to move out of a volatile position without cashing out into traditional currency, which can be slow and expensive. It's like having a digital dollar you can send anywhere in the world, almost instantly with very low fees, which also makes them great for remittances. If you want to hold value in crypto without worrying that it'll be worth 20% less tomorrow, a stablecoin is your go-to. It's the closest thing to a digital savings account in the crypto world, providing a reliable store of value. Now let's swing to the complete opposite end of the spectrum, meme coins. These are, without a doubt, the wildest part of the crypto world. We're talking about coins like Dogecoin or Shiba Inu. They often start as a joke, a parody, or a tribute to an internet meme. There's usually no grand technical innovation or complex white paper behind them. Their value is almost entirely driven by community hype, social media trends, and celebrity endorsements. It's all about the narrative, the culture, and the shared belief of a massive online community. Because of this, meme coins are incredibly volatile and speculative. Their prices can skyrocket by thousands of % in a matter of days based on a single viral tweet, and they can crash just as fast when the hype dies down. They're not really designed for payments or for complex applications. They're more like a cultural phenomenon. Investing in them is less like a traditional investment and more like buying a lottery ticket. It's a high-risk, high-reward game driven purely by momentum and sentiment. They perfectly capture the sometimes absurd, community-driven nature of the internet. So if you have Bitcoin, and then you have all these other coins, what do you call them? Welcome to the world of altcoins. The term is pretty simple. It's short for alternative coin, and it's basically a catch-all category for every single cryptocurrency that isn't Bitcoin. So Ethereum? That's the biggest altcoin. Solana, Cardano, Ripple, all altcoins. At the beginning, many altcoins were just slight variations of Bitcoin, maybe changing the block time or the total supply. But the space has evolved way beyond that now. Today, altcoins represent a massive, diverse landscape of innovation. Many of them were created to improve upon Bitcoin's design or to offer completely new features. For example, Ethereum introduced the concept of smart contracts, which are self-executing contracts with the terms of the agreement directly written into code. This opened the door for decentralized finance, or DeFi, and NFTs. Other altcoins focus on offering faster transaction speeds, lower fees, better scalability, or enhanced privacy. Each one is its own project with its own goals, team, and technology. Digging a bit deeper into the altcoin category, we find utility tokens. Think of these as a key or, a token you'd use at an arcade. They aren't necessarily designed to be money in the traditional sense. Instead, they grant you access to a specific product or service within a particular blockchain ecosystem. Their value comes from their utility, what you can actually do with them on that platform. A great example is a decentralized storage network where you have to pay for storage space using the network's native utility token. So the demand for this token is directly tied to how popular and useful its platform is. If more people want to use the service, more people will need to buy the token, which can drive up its price. These tokens can be used for all sorts of things: paying transaction fees on a network, accessing exclusive features, or participating in a platform's services. They are the internal currency that makes a specific decentralized application or blockchain work. It's a way for a project to create its own little digital economy. Next up are governance tokens, and these are all about power and influence. In the world of decentralized finance, or DeFi, many projects aim to be run by their community, not by a central company. But how do you make decisions in a decentralized way? That's where governance tokens come in. Holding these tokens gives you voting rights on the future direction of a protocol. It's like being a shareholder in a company, but instead of a company, it's a piece of software running on the blockchain. Holders can propose and vote on all sorts of things. Should we change the transaction fees? Should we upgrade the protocol's code? How should the project's treasury funds be spent? The more tokens you hold, the more weight your vote carries. This model is designed to align the incentives of the users and the developers. The people who use and believe in the project the most get to have a say in its governance, ensuring that it evolves in a way that benefits the community. It's a fundamental shift towards a more democratic way of managing digital platforms. Now we're getting into an area that starts to blur the lines between the crypto world and traditional finance security tokens. These are very different from the others we've discussed because they are regulated financial instruments. A security token is a digital representation of ownership in a real-world asset. Think of it like a digital stock certificate. That asset could be equity in a company, a piece of real estate, fine art, or even a stake in a venture capital fund. Because they represent ownership and often promise a return on investment, like dividends or profit sharing, they fall under securities laws. This means they have to comply with government regulations just like stocks and bonds. The idea is to take traditional, often illiquid assets, like a building or a painting, and make them more accessible and easily tradable by tokenizing them on a blockchain. It combines the transparency and efficiency of blockchain technology with the established legal frameworks of traditional financial securities, opening up new possibilities for investing. Finally, let's talk about privacy coins. You might think that all cryptocurrencies are anonymous, but that's a common misconception. Most blockchains, including Bitcoin and Ethereum, have public, transparent ledgers. That means anyone can view every transaction that has ever happened. While your real name isn't attached, your wallet address is, and with enough analysis, transactions can often be traced back to an individual. Privacy coins are built to solve this. Their main feature is to enhance anonymity and privacy for users. Projects like Monero or Zcash use advanced cryptography to obscure the details of transactions. They can hide the sender's address, the receiver's address, and the amount of crypto being sent. The goal is to make transactions untraceable, providing a level of financial privacy that's similar to using physical cash. Of course, this comes with its own set of debates and controversies, particularly from regulators who worry about its potential for illicit use. But for advocates, it's about a fundamental right to financial privacy in an increasingly digital world. So there you have it. We've gone from the bedrock stability of stablecoins to the chaotic energy of meme coins and all the way through the complex machinery of utility, governance, and privacy tokens. The big takeaway here is that crypto isn't just one thing. It's a massive, sprawling category of different technologies, each built with a very specific purpose in mind. Some are trying to be a better form of money, some are trying to power new kinds of applications, and some are basically just internet culture in financial form. It's a whole spectrum. Understanding these categories is, in my opinion, step one. Before you can even think about the potential of a project, you have to understand what it's trying to do. Is it a key to a new digital service, a vote in a decentralized community, or a digital representation of a real-world asset? Asking these questions helps you cut through the hype and the noise of the price charts. It lets you analyze these projects based on their fundamentals, their tech, and their potential for actual real-world use. It's not just about numbers going up and down, it's about the underlying value. Ultimately, the crypto space is still incredibly young and it's constantly evolving. It's a mix of brilliant innovation, ambitious experiments, and yeah, some pretty weird stuff too. But hopefully, you now have a better framework for making sense of it all. This isn't financial advice, but a toolkit for your own research. The more you understand the why behind each coin, the better equipped you'll be to navigate this space. It's been Create Mead. Thanks for watching. Catch you in the next one.